What is a USDA home loan? My name is RJ Baxter with Fairway Independent Mortgage. Let's talk about it in this week's tip of the week. So first of all, USDA Home Loan is one of the best home loan programs going. It requires zero down, so it's 100% financing. And not only that, but the interest rate and monthly payment are one of the lowest you're going to see it with any loan program, especially when you compare it to other programs with minimum or no down payment. The interest rate is low on a USDA home loan, and also the monthly and upfront mortgage insurance is very low. Now, they call the mortgage insurance with a USDA loan a guarantee fee, but that rate is a lot lower than other types of comparable loan programs. So you're going to get a very competitive payment with the USDA home loan. Now, there's a few things that I like to talk about with USDA home loans to help families understand exactly what it is. And the first is because of the name USDA, there's a lot of misconception out there that this is an agricultural loan. Now, USDA does lend on farms and other agricultural type programs, but the program that I'm talking about today is specifically for residential housing in rural areas. So that could be a house that's in a rural area outside of a town, but also there's a lot of small towns that qualify for USDA financing. For example, a town, maybe 8,000, 10,000 people. In a lot of cases, these towns qualify for homes within the town limits for USDA financing. This is something to check out. You can actually find, if you just Google USDA property lookup, you can actually look up a property address to see if it's USDA eligible and see the boundaries for where USDA cuts off, which is especially important for larger city areas like the Denver Front Range, where you want to see on the outskirts if you're within a USDA home loan eligible area. There's a couple other things I like to prep people for with USDA home loans. The first is there are specific nuances with USDA financing that are important that your lender is looking at. So it's important to work with a lender that knows the nuances of USDA financing. For example, one of them is that you have to be below a certain debt to income ratio. What I mean by that is your total monthly payments versus your gross income. The other thing is they look at household income when they're considering whether or not you can qualify. And if you have too much income, you may not qualify for USDA financing. So it's another important thing to take into consideration. Another one is, and this is very common, I know, in rural areas, is you cannot get USDA financing on a manufactured home unless that home was built within the past year and never occupied. This is very, very important to understand if you're looking at a manufactured home. Another thing that's common with rural properties is agricultural use on the property. So if you're looking at a property that has any type of agricultural activity going on or any other type of income producing activity, it cannot qualify, the property cannot qualify for USDA financing. This is again designed for residential housing in rural areas, not farming or not income producing activities. Now, if you have any questions about USDA financing or would like me to take a look at your specific situation, just give me a call in the office, call me, text me, email me. I'm happy to answer your questions. And once again, my name is RJ Baxter, Fairway Independent Mortgage. You guys have a great day.